When banana, your tokens aren't going up. Bitcoin maximalists are like, yeah, I'm in the middle of the bananas there, everything's fine, but you're not. So what this says is when it gets to these levels, it's oversold. And every banana zone that's happened to 2019, 2021, 2022, 23 are all driven when it gets oversold. So here we are with the M2 chart, with this chart, with the ISM. That's what a macro framework is and how it will help you. And banana zone, told you when it started it over here. We had the correction zone. We explained the correction zone. The next thing we're in is this phase two of the banana zone before the correction. We're not there yet. We had a bit of sideways for a couple of weeks, and you guys lose your minds. I can't help you.
Raoul Pal, CEO of Real Vision, said the situation was eerily similar to 2017. He also indicated that he was starting to see a longer crypto cycle and predicted it could take a while this time, given the business cycle score. According to him, this score is a macroeconomic model he uses to track the global economy's position in the global cycle. He added that it is always below 50 and usually takes a while to climb back up. According to data from CoinMarketCap, Bitcoin began trading around $1,044 in early 2017 before rising to around $2,187 on May 31st. The leading digital asset closed the year at $14,156, a massive 1,255% increase from its year-to-date price. While Paul predicts the same movement, he acknowledges that the weaker U.S. dollar could signal a slowdown in the cryptocurrency cycle, meaning it will take time before it reaches its peak. Paul also added that macroeconomic data has been one of the main reasons for the consistent decline in the cryptocurrency cycle. It's as if the whole cycle has been delayed because rates haven't been adjusted. The dollar has been stagnant for a while, he said. He also added that the current market might look more like 2020 than 2021, suggesting it could be in an earlier growth phase than many predict. Paul added that the market needs to continue expanding to attract large players. According to Raoul Pal, the real altcoin season is around the corner. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Do you remember this chart? I keep bringing this chart up because you forget it. Immediately you look away and go, well, somebody else said the market's going against tops, and somebody else said my altcoins aren't. Just look at the chart. Look at the chart. Look at the chart. Look at the business cycle chart. Look at the dollar. Generally, it gives you all you need to know. And everything else is noise. And you get so emotional about the noise. I get it. I get emotional too. My P&L goes up and down. I don't look at my P&L. I have no idea what it is. A zero idea. Literally zero. I haven't checked my P&L in 4 months. So I have no idea what it is. But I get bored when the market goes sideways. Engagement goes down. People aren't as fun. Then it goes down a bit more. And then people start getting really angry and salty and went banana and this and this and this. That's kind of a signal like we're towards the end of the thing. Don't let your emotions rule it. These things take time. The people who get really rich in crypto are in the space for a long time. They're not trading it.
Raoul Pal sees opportunities in the current altcoin landscape. He shared his views on social media, stating that while choosing the most relevant altcoins is complex, the market's overall incredulity could be an advantage for savvy investors. This analysis suggests that despite widespread caution, savvy traders have opportunities to profit from unidentified or undervalued digital assets. The current skepticism and hesitancy surrounding altcoins could provide fertile ground for future growth, and Raoul Pal's statement suggests the potential for significant returns if the right investment decisions are made. Raoul Pal's cautious optimism about altcoins continues his previous emphasis on the transformative potential of blockchain technology, as evidenced by his analysis of the Telegram blockchain project for the global banking sector. Moreover, his constant attention to underappreciated financial dynamics reflects his analysis of the importance of an overlooked financial perspective, highlighting the complex interplay between skepticism and opportunity in today's evolving markets. Veteran macroeconomic analyst Raoul Pal predicts that the current cryptocurrency bull market could peak in 2026. This prediction is based on the observation that current market dynamics closely resemble those of the 2017 bull market, suggesting a prolonged cycle that could last until the second quarter of 2026. This prolonged period would allow for a more gradual and sustained growth phase beneficial to long-term investors. Paul's analysis is based on several key factors, including the strength of Bitcoin, historical data, and current global economic developments. He notes that macroeconomic trends significantly influence institutional investor interest and the valuation of cryptocurrencies, recalling past cycles. Anticipation of a cyclical shift is influencing investor sentiment in cryptocurrency markets, with institutional participation expected to grow, driven by favorable monetary conditions and a weakening U.S. dollar. The current cycle shares parallels with the 2017 cycle, driven by trends affecting market dynamics and technology adoption. Cryptocurrency markets are closely following macroeconomic indicators. Investors may experience increased price volatility and liquidity fluctuations, highlighting the importance of a long-term strategic perspective. Bitcoin and altcoins such as Ethereum and Solana should benefit from these macroeconomic conditions. Paul highlights the impact of macroeconomic trends on institutional investor interest and the valuation of cryptocurrencies reminiscent of past cycles. The similarity of the current cycle to the 2017 cycle is not a mere coincidence, but reflects underlying market forces. The gap between Bitcoin's price and the global M2 money supply, highlighted by cryptocurrency analyst Colin, adds an additional layer of complexity to market dynamics. This gap suggests that the current bull market may not be over, despite some analysts' concern about a potential market correction. Paul's forecast also aligns with broader market sentiment, which suggests the current cycle is still in its early stages. If his predictions are confirmed, the peak of the cycle could be postponed until 2026, paving the way for a prolonged period of accumulation and growth. This means that July and August of this year could mark important milestones in the current cycle, potentially leading to a more sustained surge. Paul's prediction of a peak in the current cryptocurrency bull market in 2026 is based on historical market trends and current economic indicators. The weakening U.S. dollar and the divergence of Bitcoin's price from the global M2 money supply are key factors in this analysis. Paul's forecast suggests a prolonged period of accumulation of growth, which could be beneficial for long-term investors. Paul also linked the fluctuations in the cryptocurrency market to the global business cycle, which looks at fluctuations in a country's economic activity characterized by recurring periods of expansion and contraction. He thinks the business cycle takes a long time to go below 50. This isn't a guarantee or a prediction right now, but it's what he has in mind because of the structure of the business cycle. So we can probably continue like this for longer, and that will allow us to achieve much higher prices in the future.